Real estate. As a Vancouverite, you would be hard-pressed to go through a week without seeing a new update on the real estate market, be it positive or negative. Coastal Front is looking to add to the discussion today by sitting down with two industry experts, Trevor Koot and Brendon Ogmundson from the BC Real Estate Association. The BCREA is the professional association for over 24,000 commercial and residential realtors in British Columbia. The organization supports the province's 8 real estate boards by providing professional development opportunities, advocacy, and research. Trevor became Chief Executive Officer in the spring of 2022 and brings a wealth of knowledge with him, which includes serving as the CEO of the Kamloops and District Real Estate Board, Executive Officer at the Koot Association for Realtors, and being a former managing broker and realtor himself for several years. His colleague Brendon served as the Deputy Chief Economist for 9 years before being appointed as the Chief Economist himself in October of 2019. And Brendon specializes in macroeconomic forecasting, housing market analysis, and economic modeling. He's responsible for producing forecasts for the BC, Canadian, and U.S. economies, as well as authoring quarterly analysis of mortgage rates and the BC commercial real estate market. So Trevor and Brendon, thanks for being with us today.
Thanks for having us.
Thank you.
Great. So why don't we start, Trevor, with yourself? I think a lot of British Columbians probably don't realize that they are probably indirectly touched by the BC Real Estate Association through their realtor. Why don't you tell us a little bit more about the BC Real Estate Association, please?
Yeah, absolutely. You articulated it really well in the intro, Andrew. I mean, we represent the interests of, you said over 24,000, and it's broken the threshold of 25,000 realtors in British Columbia during COVID times. And a lot of that has to do with the professionalism of the industry and of the realtors, providing education, as you pointed out, and providing the services that they need to do their jobs. But in addition to that, it's representing them in ways of economics, as Brendon brings to the table, and statistics, but certainly from an advocacy and a lobbying perspective. So we act as the professional membership organization. We work closely with the regulator, the regulator of the real estate industry, which is the BC Financial Services Authority. And then, of course, lobbying efforts towards government when policy changes, and working with them, in fact, in some cases, to try and help provide evidence-based research for them to populate that policy.
Okay.
And then we shift those gears when they don't listen to us and have different conversations.
And do you find that, generally speaking, because most of your regulatory environment is going to be based provincially, right? Like through
Yes.
the BCFSA.
You're right. Yeah.
And we had Chris Elgar, as you know, Chris. He was as one of our guests a couple years ago. We talked more about the credit union space, but he's with the BCFSA. Do you find the BC regulators pretty open and receptive to your guys' feedback?
The regulator has been really good to work with.
Yeah.
And of course, well, not of course, this would be news to a lot of people, but there was a major change in the structure of the regulator in recent years. In 2018, we had a co-regulatory environment with an office of the superintendent and a real estate council. That changed to oversight by the BC Financial Services Authority. And we maintain good relationship because, as much as we're advocates and we need to lobby, we are all interested in consumer protection. And so, aligning those interests and making sure that the policy that's implemented is well suited benefits all of us. Having said that, in kind of the recent past, and we'll talk about this later in the podcast, I think, some of the challenges, not so much with the regulator, but with government and them not empowering the regulator properly to do their job.
Oh,
and
really?
So we can touch
That'll
on
be
that
an
a
interesting
little bit.
conversation. Yeah. Now, you mentioned that you have 25,000 members now. I would imagine that most of them are residential real estate agents as opposed to commercial?
Yeah, and to make sure that there's a differentiation, not all real estate licensees in the province are realtors. So people can hold a real estate license and not be a realtor. They are a realtor by being a member of a real estate board in BC. which makes them a member of the Canadian Real Estate Association. So it's a federal organization. They have a code of ethics, a realtor code of ethics that they adhere to, which elevates the responsibilities and the requirements. But yeah, we're 25,351 by last count.
Yeah.
So yeah.
And the majority is going to be active residential real estate agents.
Yeah, it depends on market size too. Like in small markets, they just do both.
I see.
In a market like Vancouver, you're going to have people that specialize in commercial. So
yeah. So with respect to, each province would have its own BCREA equivalent. So you've got your peer of yours in Alberta. Do you guys do any collaboration with them? Do you have aligned interests at all? Is that a factor?
100%, yeah. Okay. And as you pointed out in the intro, I'm new to this role, but not new to the industry. And,
yeah.
When I was part of the regulator in Saskatchewan, and I can tell you that there is always watching what is happening in other parts of the country, but also in other parts of the world. We're going to talk about the cooling off period a little bit. We did a lot of research around that and looked at what those same policy implications are in other jurisdictions around the world, and use that as evidence to kind of influence our lobbying efforts to government.
Great.
And then of course there's CREA as well, the Canadian Real Estate Association. So they sort of handle national issues, but we'll collaborate with them on government relations and sometimes on economics, but mostly government relations.
Okay. Yeah. Well, let's get into this then. We're going to get to policy, but before we do, I want to help the viewers get a bit of an idea of the landscape. We're mid-2022 right now. We've come out of 2 years of COVID, a pretty crazy market, rising interest rate environment. So in 2021 and 2020, we saw real estate prices skyrocket here in this province, with month-over-month sales numbers that were smashing previous records. And now halfway through 2022, we're beginning to see a decline in both sales volumes as well as prices. So Brendon, question for you. For our viewers, can you help elaborate on what is happening right now and where do you see this BC market going?
Yeah, sure. So we can kind of take a trip through history with this chart.
Yeah.
2018, 2019. 2018 was the last time Bank of Canada was really tightening rates. We had the introduction of the stress test in 2018. That really impacted sales all across Canada, but especially in more expensive markets in BC. So we saw really weak markets 2018, halfway through 2019. If you recall, halfway through 2019, we started to actually see bond yields start to fall. We had actually an inverted yield curve at one point in 2019. Mortgage rates started coming down. Market was really recovering. Right in 2020, we were expecting to have a pretty strong 2020. COVID hits. We have, as you can see, that big dip in the chart is the COVID months where activity slowed to historical lows. But once everyone kind of realized we can still do business safely, and the economy started to open, and most importantly, interest rates fell to all-time record lows. I think they were about 60, 70 basis points below their previous record. I mean, the 5-year fixed rate fell to 1.8% at one point. And we have a really interest rate sensitive market. And as you can see in the chart, home sales responded really, really strong. We had an incredible recovery. Part of it is too just the way COVID impacted the economy. If we look at high wage employment, it actually grew 10% during the pandemic. A lot of the jobs lost were in lower wage service sector, and still kind of struggling to recover now. So all through 2020, we were recovering. Halfway through 2020, 2021 was a record year. We had record sales in nearly every region. We beat 2016's record sales in the province by about 12,000 sales. And we had a pretty strong first quarter 2022. And then interest rates really, really started to rise. And now we see sales that are about 20% below average in kind of major markets and kind of around normal in some more affordable markets like the North and the Koot.
So 20% below average, and how much lower than where we were a year ago?
We're about 35 to 40% below where we were a year ago. Of course, a year ago was still pretty strong.
Yeah, of course.
But yeah, those interest rates really bite, especially now. 5-year fixed rate is over 5%. If you get that from your lender, that means you're qualifying at 7%,
right?
A rate that's not really been relevant in Canada since the early 2000s. That has a really, really big impact. And I like to kind of say, you differentiate demand with sales, right? The demand didn't really go anywhere. We still have a lot of young people in this province. that want to buy homes, that would like to buy homes.
Yeah.
We just can't turn that demand into sales right now because it's really hard to qualify at these rates and prices.
In simple terms, what are the main factors that you feel are contributing to this sharp contrast right now?
I think the decline in sales is all about interest rates. So we were expecting sales to come down this year because we're not going to set records every single year.
Yeah.
So if you look at our forecast the end of last year, I think we were expecting like 100,000 sales this year. Now we're probably on pace for about 85,000 or so, which is still a good year, but that's on the back of a really strong first kind of quarter.
Yeah.
Where we're on like 110,000 sale pace. Now we're on like a 70,000 sale pace, and so it's going to balance out. I think where it's really going to show up is 2023. As long as interest rates stay this high, I think we're going to see pretty weak activity. It's going to look a lot like 2018, 2019.
Is it a fair statement, Brendon, that if we're going to start to see a downturn in prices, that the first sign of that is the prices don't move, but sales volumes drop off as potential sellers hold out with the hopes that rates will or pricing will go back up?
It's exactly how it always happens. Sales fall first. In a situation like we have now, where we started the year at record low inventory of listings, it takes a while for those listings to accumulate to the point where there's just more choice in the market, so to get downward pressure on prices. But it also just takes time for expectations of sellers and buyers to match. So if you're a seller and you still have a job, you're not panicking, you don't have to sell your home, you can just take it off the market.
Yeah.
You just like leave it on the market longer and longer. Sellers are always anchored to a price, the best price from 6 months ago. Buyers are anchored to whatever price they read most recently in the newspaper. And it takes or like whatever is going on in the media, basically. And it just takes a long time for those expectations to match.
Yeah,
so you can have like a long kind of, that's why prices
And when you say a
so
long time,
sticky.
can you give some context? Are we talking 4 months, 6 months,
usually,
up to a year?
Yeah, no, like usually it's like, when we look at months of inventory, if we have like 6 months of kind of pretty high months of inventory, that's when we start to see real downward pressure on prices.
Okay. One of the things I'll comment on is I find as growing up with a father who was a realtor for 25 years, but working in the financial markets, in our industry, we never talk about sales volumes of how many shares of Royal Bank or Walmart sold today. I mean, sometimes you might, but it's generally not discussed. Because it's whether you sold, whether a Royal Bank had 2 million shares traded hands or 14 million shares, no one really cares. What they care about is the price.
Yeah.
One of the things I've noticed, and it's I don't know if it's a criticism, probably not, just more of an observation, is that in your world, there's so much talk about sales numbers, but a lot of times when guys like you are talking, you're saying, well, sales are down. It doesn't necessarily mean prices are down.
No.
They're two different things, right?
It's
but as a realtor, I guess you are more interested in sales volume, right?
Yeah, activities.
That's how you make money, right?
Yeah, and so it's a disconnect in it. We see it all the time where, and like I was saying about buyers and sellers' expectations. When you kind of hear in the media like, oh, the sales are down 20% or whatever, but a lot of buyers take that 20% and think price is down 20%.
Yeah, 20%.
They think because buyers think like if you're not working in real estate, you're thinking prices most of the time too.
That's right.
But if you're in the industry, we almost exclusively focus on sales activity.
Yeah.
So there's this real disconnect.
That's
and that's
right.
part of what that gap in expectations is, because it's like we're not talking about prices. And like to keep talking about 2018, 2019, sales fell like 35% over that period, and prices in the province were down over that 2-year period 1.5%.
Right. Yeah.
You can get big adjustments on the sales side without much of an adjustment on the pricing side.
Yeah.
It's really important to understand how understanding all of those scenarios come into kind of the broader picture as well, because as Brendon pointed out, those sales are down. It doesn't mean that the buyers aren't out there.
Yeah.
And one of our concerns is we've been saying since 2019 or 2018 that supply is a major issue in the province, and in order to really kind of calibrate the economy, the supply demand scenario is we need more supply.
Right.
But when that demand goes down because of interest rates, there's less sales, then people feel like, oh, now we're okay. Now we don't need any supply. And it doesn't mean that the buyers aren't there. It means that just the environment for them to buy in is not optimal.
Yeah,
So that's one of the challenges with our lobbying efforts, is to say we still need the supply.
Yeah.
And what can government do to incentivize developers to go out in a market like this and say, you still need to build some supply. Yeah.
When you say incentivize, I mean, my view is that the biggest problem is that they're already incentivized. The problem is that they need to be given an opportunity to build. I mean, here in Vancouver proper, as you know, it's a mess.
That'll come up in our policy conversation in a few minutes. Yeah.
Okay. So the Bank of Canada just raised interest rates by a whopping 1% on July the 13th. It's the first time we've seen a full percentage point increase by the Bank of Canada since 1994, and only the 6th time in its entire history. Normally they raise and cut rates by quarter point increments. And right now, mid-July, there's about it's a 100% chance right now, market's pricing in, of a 75 basis point increase in September, and almost is about 80% chance of maybe even another 1%. I think it really will be dependent on what happens with inflation numbers. So the market's anticipating between now and the end of the year for interest rates to still go up by another 1.25%. There's a lot of Canadians, a lot of British Columbians sitting on variable rate mortgages. Can you, Brendon, talk a little bit about the dynamics of how interest rate hikes and local real estate markets kind of intersect? Like, what does that mean for to kind of dumb it down for our listeners?
Yeah, so I have a chart looking at the Bank of Canada and what, like, we hear the Bank of Canada talk about neutral rates. That one.
Yeah, this one here's a great chart.
And so we put together, like, if the Bank of Canada gets back to what it considers neutral, what does that mean for mortgage rates? What's a neutral mortgage rate, like an equilibrium mortgage rate?
Yeah.
So we think neutral, you think, what should the Bank of Canada rate be in long term when inflation's at 2% and the output gap is 0? So right now, if you see the green line in this chart is the 2-year bond yield. It's a really good representation of market expectations because it's the expectations hypothesis. It's really only has expectations about monetary policy baked into it. It's not really a term premium. And if you look at that rate, I think it's around 3.2 or so, which would mean about another, 75 basis points. So maybe they get there all in one shot in September. That would mean that rates are above the Bank of Canada's estimate of neutral, between 2 and 3%. So that's them really slamming on the brakes on the economy. It's going to be really interesting to see where they go from September. So say they go 75 basis points. Now they're above their neutral estimate. It's going to be, and they talked a lot about front loading, like that last one was front loaded. That kind of implies that they have a destination in mind that's not that far away from where they are now. So you see in like 5 years.
This is what Tiff Malkin said, you're saying, right? With this the reason they went to the 1% was to front load the rates.
Front load it, so they don't have to do more.
Do you buy that though? Do you actually believe that?
Kind of. I mean, I think people.
I mean, these are the same central bankers that told us we hit peak inflation like 3 months ago at 5%.
Yeah, inflation forecasting is difficult.
And then the same bankers who also said about 8 months ago that inflation was transitory.
Right. But they also didn't know that Russia was going to invade Ukraine.
Yeah.
Right. And so the problem they have right now is that the main sources of inflation, if you look at that 8% inflation, about 4% of that, 2% of it or so is gas prices.
Yeah.
A big chunk of it, maybe that 2%, is just gummed up supply chains. So if you look at their estimates when they decompose inflation. And then, we have like more of the core inflation that's still rising, although it started to looks like maybe peaked last month. It's hard to tell with 1 month of data. So those are really things the Bank of Canada can't have any control over. There's nothing the Bank of Canada could do or could have done a year ago to bring global oil prices down or to prevent Russia from invading Ukraine. So whatever they'd done, they could have raised rates and run these simulations and models. They could have raised rates by 200 basis points, 30 basis points last year, and it would have impacted inflation a year later by maybe 1%, right? So we would still probably have 6% inflation or so, even if the Bank of Canada had acted a lot earlier. This is what people don't really realize. Monetary policy is a really blunt tool. It affects the economy a lot. If you look at models that the Bank of Canada uses, that other central banks use, every 100 basis point increase in rates lowers inflation by about 25 basis points after about a year, a little longer.
Okay.
It's just not that powerful. It's really good at calibrating inflation around a 2% target. It's really bad at bringing inflation down from really high levels, especially when that inflation's being caused.
Well, and you can see that in emerging
factors.
markets like Argentina, for example, has no bearing at all, really. I mean, it's like you can raise rates as much as they want, and it doesn't. It's still inflation is still totally out of control. But this chart, maybe we will digress for a moment on policy. And what I like about this, I saw when I was looking at this earlier today, is your stress test component here. So if we see mortgage rates right now in the 4.5% to 5.5% range, to qualify, you got to qualify for 6.5% to 7.5%.
Yeah.
That eliminates a large part of the market. Is that not a fair statement?
Oh, a huge part of the market. And you mean,
or I mean, they qualify, but it just instead of qualifying for an $800,000 mortgage, they're qualifying for like a $500,000.
Yeah,
mortgage.
it wipes out a pretty significant amount of your purchasing power. I think that's a way to put it. And like even capped at 5.25% as a minimum qualifying rate, like fine, you can live with that. Clearly, it didn't have much of an impact. This past summer when it came into effect, when that minimum qualifying rate came into effect, there was still lots of sales happening. People were qualifying easily.
Oh, sorry, the stress test is capped at 5.25?
No, it was. It's the higher of. It's the higher of 5.25 and your rate plus 2 basis points.
Yeah, sky's the limit right now.
So now, it's probably far too stringent right now to qualify people at 7%. I don't,
if we see mortgage rates go up in lockstep with the Bank of Canada, let's just make an assumption. Yeah. That's another 1.5% perhaps.
Well, no, now 5-year fixed have that priced in already. So like the 5-year fixed mortgage rate, of course, moves based on expectations, and it hit 5.15 or so.
Yeah.
That was the 5-year bond yield pricing in Bank of Canada at 3.5. So when all of this, we've seen bond yields actually come down in recent weeks.
Yeah.
And the 5-year fixed rate came down all the way from 5.14 to 5.09 or something.
Yeah.
So a lot of this is already priced in. That's why it's so interesting what they're going to say in September, because if they hint like, oh, there's more to come, then we'll get higher 5-year fixed rates. If they hint we might be done, maybe rates come down a little bit. I mean, our kind of equilibrium estimate is, a little bit.
But at least,
it's kind of
between now and September, unless things change dramatically, there's also going to be another inflation print in the month of August.
Yep.
And if it comes at 8-9%, I would imagine that these rates are going to hold steady at least until that next rate announcement by the Bank of Canada. So Brendon, you've got this slide in front of you. It's called Simulations, Rising Rates and Home Sales. So walk us through what this graph is telling us.
So we went back and looked at the past 40 years of Bank of Canada rate tightening cycles. There's 10 of them. And then traced out what happened 24 months after the Bank of Canada started raising rates. That's that shaded area.
Okay.
So you can see there's a pretty wide range of results from up a lot to down a lot. And then we looked at
results of what in sales?
Oh, this home sales. How much home sales have have
sales
changed?
Volume or prices?
Sales, unit sales.
Unit sales. Okay, gotcha.
Yep.
Okay.
So index to 100. Where do they go once the Bank of Canada starts tightening rates? So you can see we compare that then with what happened with B20 after 2018. And then our current rate path model. So we'd done this with a bunch of different assumptions about where the Bank of Canada was going, with how aggressive they have been. We went back and altered that assumed rate path, and then added what's actually happened since we did the initial analysis. You can see that red line is tracing pretty close to the low end of the historical range and pretty close to our model path as well, which would then assume that sales, if the Bank of Canada does what our model expects, if they don't deviate from their current expectation, sales will be down about 60% from peak over the next 2 years. That peak was really high.
Yes.
But that's a pretty, that means like 65 to 70,000 sales in the province, which is a little worse than 2018, 2019.
And what causes that? Is that just everybody kind of waiting to see where rates settle out, and they're kind of like, okay, you know what, I'm just going to put myself on hold for the next year or two? Or what causes such decline in sales activity?
Well, people are pretty interest rate sensitive. So with everything, monthly payments matter. If you're going to raise that monthly payment, and with the stress test. And so the stress test introduces like kind of a non-linearity that's hard to model, because now there's like a threshold.
Yeah.
But just like, normal kind of models that incorporate demand and how demand is impacted by interest rates. This is sort of, you shock interest rates, this is what happens.
Okay. This next slide, I think, is just as interesting. Again, your constituents, your stakeholders are realtors, and of course, they are interested in sales volume because that's how they get paid.
Yep.
I think our listeners are probably more interested in prices. I mean,
what's going to happen to the price of my house?
Exactly.
Yep.
Yeah. Or can I? And I think about the young people that are in this room helping record this, and they're maybe not in the real estate market. This might be their opportunity, although be it a cost of borrowing is much higher, but prices come down. If rates go up by 2 or 3%, but prices come down by 20. So walk us through this This one here. It's called
Same.
Simulations, Rising Rates and Home Prices.
Yep, so same exercise, this time with prices. So again, looking at the past 40 years of Bank of Canada tightening cycles. That's again the shaded area. Huge divergence in outcomes from down to 10% to up after 2 years. And then again, following, shocking the model with the current rate path and see what happens to prices. In the model, the way price declines are generated is you need to have a real imbalance of listings over sales. So as sales fall, listings accumulate, you start to get downward pressure on prices. So in our model, it takes kind of a long time, even with a pretty aggressive Bank of Canada, to get prices down about 10% after 24 months. What we're actually seeing is that the average price, which is really impacted by composition of those sales, is down about 14% already since February, after a few months. And if we look at measures that kind of try to correct for the composition of sales, prices are down about, I think, like 8% or something.
Okay.
So the
When
composition
you say
part,
measures to compensate, is one of those the fact that your data set of sales is probably a smaller number, so there's some outliers that are maybe skewing those numbers downwards?
It's actually, so we have this, the CREA produces this HPI, which is tries to assess
Home price index.
Home price index. Yeah. It's kind of like Case-Shiller, so it's like a paired sales. You're trying to compare apples to apples.
Okay.
So if this type of home sells, let's compare it to the same type of home, right? And see how the prices change. So same characteristics and everything.
Yeah.
The average price can be really skewed if, especially in the last year, we had a lot of more expensive single-family home selling, especially in markets like the Fraser Valley and Chilliwack, because people were going out to those markets because you could get space more affordably. Now in the Fraser Valley, they saw the last few months their lowest share of single-family homes on record. They're not selling at the same rate. So that really changes the overall composition. So when you're calculating an average, really distorts things. So
I see.
About half of the decline in average price right now is just that distortion. But there is some real weakness in the market right now for sure.
Okay.
It seems like things peaked in February.
Well, based on this red line you're showing here, that's the actual average. Like these are real, tangible,
that's
real-time numbers.
Average up to May or June. Yeah.
Okay, and what we're seeing based against your historical model is
Performing
prices have dropped a lot more than what would historically happen.
Yeah, and it's not. I mean, it's very different depending on the region you go to. So, like,
okay.
Victoria was actually up month over month.
Okay.
And like,
so out of all regions
down,
in BC, Victoria, from a value perspective,
Victoria was still going up. The HPI month over month. I think some regions, maybe like the interior, are still seeing not Kelowna, but more like.
Where's the worst? Who's had the biggest drop in prices? Probably.
I think it's Chilliwack and Fraser Valley. Yeah. But those are the markets that went up like 50%.
Right.
In 2 years.
So that's good context as
well.
So
it's the markets that went up the most are seeing the largest pullback. They tend to be the most interest rate sensitive, just the demographics of those areas. Younger families are going to be more interest rate sensitive.
Okay. Brendon, as I'm looking at this graph, this is by month, so this goes out 2 years, and I look at the variation in historical prices. It looks to me like if you were going to make a bet, I mean, the chances are if you bought a house now and at the beginning of this rate rising cycle, historically, you in 24 months, 25 months, you're going to pretty high chance that the value of your home is a lot higher.
When we run kind of our model simulations, pretty good chance we see the Bank of Canada cutting rates as early as next year. So,
do you actually believe that?
I do. I do.
I'm like the only guy in this industry that says no fucking way. I'm assuming like it's not happening.
The classic economist answer is a 40% chance. So you're like you can never be wrong, really, right? But like if you take seriously, talk about a recession in the next year, if that happens, and I don't say 40% chance. Rates are coming down.
Okay.
If we get any good news on inflation, rates are going to start coming down at some point. Especially if they over tighten. If this assumes they over tighten to about 3.25, come down to 2.5.
Yeah, fair enough.
If you look at measures in the U.S., you can see between meetings or from their most recent Fed meeting, expectations derived from the yield curve of what the Fed's going to do have actually come down like 100 basis points.
Yeah, it's wild.
And now are pricing in rate cuts happening in late 2023. It looks like. So
it is.
Again, these are models. Models are almost always wrong.
Yeah,
so,
exactly.
But there's a very good chance. That's one reason for some optimism. I think maybe interest rates have peaked. And then the next one is why I'm really optimistic about housing in BC.
In BC,
if you want to go to the next slide, is the demographics of BC. So that orange block is all of the millennials, the largest population cohort in BC. We're going to have, if you believe BC Stats projections, more people aged 30 to 39 over the next 10 years than we have in the past 50 years.
Yeah.
And the thing about 30-year-olds is they really need homes, right?
So
yeah,
sure.
I've got kids. I don't want them living with me when they're 30.
Yeah.
I don't think most people do. We need homes for 30-year-olds, and this probably get into supply too. But like the demand is going to be there. It's just a matter of like whether or not we can really satisfy that demand.
And this doesn't even include. Is this including immigration from other provinces? And
the population projections do. The other one's a snapshot of current population.
Oh, current population. Oh, this one here. Yeah. Okay. Gotcha. Yeah. This kind of reminds me of. Do you remember that book from David Foote, the professor from University of Toronto? Boom, Bust, and Echo.
Yeah.
It was a pretty cool book. He had
we start to see the results of that now.
Yeah,
right?
exactly.
Yeah.
He was. I remember him saying like he was expecting like fish sales to increase and beef sales to decrease because I guess people go from eating beef to chicken to fish.
Is that a thing?
And like alcohol, they go from drinking cheap beer to wine to hard spirits. They go from playing skiing to like tennis, and this is why I think now.
Was that backed by like longitudinal studies of like they actually see like if people change their behaviors?
Yeah, it's like along this line.
Makes sense.
Yeah, and that's I think that's why that goofy game, which is on tennis courts now. They play it on tennis.
Pickleball.
Yeah.
It's just like just like a bad knees version of tennis, right?
Tennis where you don't have to move.
Exactly. I think that's the baby boomers, right? They just their knees can't handle.
You just
the real
lost
tennis
so much of your audience. Like, is he slandering pickleball?
And e-bikes.
Yeah, and e-bikes. Yeah, exactly. Yeah.
Never pedal up a hill again.
Yeah.
This question for either of you fellows. For prospective buyers out there, and this is really good, Brendon, this helps give people context to where things may go. How would you advise potential buyers today to navigate in this current environment? Do you have any advice to give them?
My advice is always the same. It's for young people. It's find something you're comfortable with that you can afford, especially, and that you're going to stay in for at least 5 years so you can ride out all this volatility. Over time, housing's been a pretty good bet. I mean, it's over the past 40 years, it's been a pretty good bet. Not that you only should think of it a bit financially, but generally, if you're in a house long enough, you can kind of smooth out all these ups and downs. And most importantly, find something you're financially comfortable with. Don't take on too much. Okay. Don't sacrifice your life for your house.
Yeah.
And I can't add to that. I mean, I think, the concept of homes being an investment, real estate is an investment, and can be an investment in kind of the same line of thinking as the world that you work within. Yeah. But a home should be a home first. Yeah. And people need to make that decision outside of markets and potential upswing and speculation. You're going to need, whether it's this place or the next, you need a roof over your head until you're done.
And we need a lot of help to make it easier for young people to get into homes.
And it's
far too difficult.
It's a paradox, right? Like you in order to make it easier, we need more supply in order to generate, kind of work towards affordability. But those that have homes don't want their values to go down in line with what makes it more affordable for the next generation to come in. So, it's a push and pull, and that's how markets work. That's economies.
And that's actually, that almost divides the lines in some of the municipal parties we're seeing here in Vancouver right now, those who are pro-development versus against. I have one other question about interest rates in this rate tightening cycle. Are there any particular regions that would be more sensitive to a fast rising rate environment than others, or is it pretty much going to affect all British Columbians the same?
Yes, we have that chart, and so far what we've seen is that more expensive areas, no surprise, have been way more sensitive. Okay. Or places like Chilliwack that saw a lot of like pandemic trend kind of driven demand that has now kind of dried up. So like the affordability difference between parts of Vancouver and Chilliwack really, really narrowed. So now you're like, well, do I want to commute from Chilliwack So a lot of that demand has definitely, at least the sales activity has gone away.
Yeah.
Markets like the Kootenay and the North that are more affordable haven't really, I mean, they're down because they were setting records last year. They're down a lot less than more expensive markets of the Lower Mainland.
So we're going to go through a few different policies that both the federal and provincial governments have either come out with already, or they've recently passed in legislation, or they're proposing. In 2019, the BC government launched an independent review of money laundering in the province, led by Honourable Austin Cullen. And this, in his final report, which was just recently published, there were several recommendations specifically addressed to the real estate sector. Now, Brendon, you gave testimony at the Cullen Commission.
I did, and I was happy to see a lot of that testimony reflected in the report. I think, what do you call him? I don't want to call him Cullen. What's his?
Austin Cullen.
Commissioner
Cullen.
Yeah.
I think agreed with a lot of our viewpoint on what's been the cause of unaffordability in BC housing markets. It's not money laundering, and I think seems like a pretty fair guy, and I think his conclusions were very fair. And maybe I'm only saying that because he agreed with us, but no, I mean I was happy to give that testimony, and it seems like
if there were one or two recommendations within that report that you wanted to highlight, that you support, that you agree with, what would they be?
I think to Brendan's point, like the nod towards not only that money laundering contributed to the unaffordability environment in BC, but that supply is the culprit, right? Or lack of supply. And that is really where focus needs to be. He gave a nod towards that. I think the other piece is the empowerment or the extended necessity for FinTrack, the financial organization federally responsible for managing, anti-money laundering initiatives across Canada through various sectors, including real estate, giving them a little more or making them more accountable, accountable for what their role is. So that in response to the report, my messages were, as we spoke with media and other stakeholders, is the real estate industry is very interested in helping in any respect that we can, but the guidance is limited or non-existent, and then it's hard to meet expectations when there's a lack of guidance. So
right.
Just those would be our biggest takeaways. Listen to Commissioner Cullen.
Okay.
We were supportive of the report.
Okay.
Yeah.
Were there any recommendations that were in that report that just don't hold weight or are just unrealistic as far as implementation?
I think from the real estate perspective, no. One of the kind of recommendations or guidelines of the recommendations was to empower the BC Financial Services Authority, the provincial regulator, to take some of the initiatives of FinTrack or empower them a little bit more on the anti-money laundering side. And we just don't see that, one, that's not their responsibility. FinTrack has all of the resources that they need, and they just need maybe to better utilize them. But also, it is a federal jurisdiction, and we want to see BCFSA be able to focus on the things that they already are not resourced enough to do,
sure.
And kind of empower them to do their job as it currently exists. So, Cullen didn't specifically say do this or don't do that, but we just want to make sure that interpretations of what he's suggesting are kind of implemented accordingly.
Okay. Yeah. Okay. All right. That's good. Housing affordability. You've been mentioning a few times about supply. So housing affordability is becoming obviously a very dominant topic amongst all three levels of government. We've got a municipal election coming up this October. So we're hearing about a lot here in British Columbia amongst the mayoral candidates and people running for city council, with promises from all these politicians and how they're going to fix things. We are going to go through three legislative promises by the federal and provincial government on policies they've come up with. and I want to get your guys' take on it. So let's start with the first one. It's a federal policy by the Trudeau government, and it's referred to as the 2-year foreign buyers ban. So first simple question is, what do you think of this policy, and is it going to have any unintended consequences?
No, I think it's one of those policies, and they know this, that is politically popular because people like to blame other people who aren't themselves. But there's nothing in the data to support it having an impact. I mean, the markets where it might have an impact are Vancouver and Toronto. In BC, and mostly in Vancouver, over the past, since the pandemic really, true foreign investment, so non-resident purchase of real estate in BC was 0.5% of transactions. So yeah, you can ban it all day long. It was basically banned over the past 2 years. We had very little foreign buying activity. Even if you increase the definition to anyone in the transaction is a non-resident. So you're married to someone who's not a citizen, then it goes up, I don't know, to like 1% maybe. It's just not an issue. It's such a, but it's going to be, it's a politically popular
virtue signaling.
But every party was recommending doing it. They all know it's not going to have any impact. It's kind of the perfect policy because it's one of those policies that gets you political goodwill, and it's going to have no damaging effect to anything. So
it's not going to move the needle at all. Okay, no. That's what I kind of figured. Okay, the next one I want to talk about is also another federal one, and it's called the ban on blind bidding. So first of all, can you explain what the heck this means, and what kind of impact is this going to have on the market?
Yeah, so I think to your point, first an explanation is warranted for the listener. Blind bidding is terminology that's used pretty generally across Canada, whether federally or in provincial jurisdictions, to kind of describe the current environment that real estate is traded in, especially real estate through a realtor or a licensee in those jurisdictions. And that is where a buyer will put in an offer, and that the contents of that offer, the details of that offer, are not shared with all of the other buyers. So the exact opposite of blind bidding is an open auction, where you're holding up a paddle and everybody knows what you bid in real time. When this is a conversation topic, I really try to change the terminology to confidential offers, because then people know what they're losing. So if you ban blind bidding, then you ban all of the confidentiality that is involved in the transaction process. Our position is similar to what happened in Ontario last month, maybe, or month before, where the regulator just opened up the opportunity for the consumer to have choice. So they didn't say we're banning blind bidding, which is what the Trudeau government kind of wrote into the budget narrative, was a ban on blind bidding. But what they did was say, we're not banning blind bidding. It's still a process that's allowed, but we're also allowing open offers and kind of an auction style. In British Columbia, auctions are allowed. You can sell your home by auction. There's auction houses that do that. It's not popular, obviously. The majority of houses are sold through the MLS system by a realtor, for obvious reasons. It's a process that works. It provides confidentiality to the parties as necessary. One of the concerns around the process of confidential offers, and the reason that the Trudeau government kind of talked about this, is that there was a perception that there's a huge gap between the accepted offer and the next highest bid. So without the buyer being able to see what they're offering and what others are offering, then somebody will come in and say, we're gonna pay $50,000 more than the purchase price, or than the listing price. Okay. And the next person only paid $20,000 more than the list price. So there's a $30,000 gap. Saying that actually inflates the price and kind of, where they wouldn't have had to. A couple of things about that. One, the person with the most money is going to buy the house anyway, regardless. But also, all of our research showed that there's a psychological component to open bidding, where it doesn't suggest that people will stop. If they know what others are bidding, it actually pushes prices higher, or could push prices higher, and there's a psychological component to that. And then the third piece of this is open offers are, there are bans on blind bidding, bans on confidential offers in other jurisdictions in the world, and they saw all of the unaffordability issues that we saw in British Columbia and other parts of Canada as interest rates dropped, as the governments and stakeholders started to affect change in order to kind of offset the issues with COVID and with market conditions. So all of that said, we would be adamantly opposed to a ban, an outright ban on blind bidding, but we do see the opportunity for the consumer to have choice, and arguably they do now.
Yeah. And so just to be clear, Trevor, you were saying that Ontario opened this up to let the seller choose?
Yeah, so their regulation didn't have the option for an open offer system.
Okay.
And so they changed that. In British Columbia, that option is already available.
Okay.
Like a seller can go to an auction house. Yeah.
So I'd add three things.
Yeah.
Whoa, I missed three things.
No, just enhance.
That's why you brought him.
Yeah, right. Exactly.
That's a smart CEO.
All empirical studies done on auctions versus other types of transaction structures show that it has at best no effect and often causes prices to rise higher than they would otherwise. I said I had three things. The second one, Australia has about 25% of their transactions are done through auctions, and sometimes out on the front lawn type auctions. They had prices rise just as much as Canada did. So clearly prices don't rise because of how transactions are structured. Third, and really interestingly, you can't have auctions and cooling off for kind of obvious reasons. If you have people bidding and their incentive is to bid the most money possible, and then they're like, oh, I didn't want to pay that much, and then you use the right of whatever was it, rescission?
Yeah, right of rescission. Yeah,
you can't have that. So that's why in Australia, if you opt for an auction, they have cooling off in Australia. If you opt for an auction, you can't have cooling off.
Yeah.
So you can only have one or the other. You can't have an auction and cooling off.
What a mess. Well, we're about to get into cooling off in a second, but I do want to just on this blind bidding ask too. So being someone who trades in the equity markets all the time, we're dealing in an open auction environment constantly every day, and it seems logical in the world we're in. But I think the big difference is that when I'm buying or selling Royal Bank shares, there's only two things I can manipulate or change: how much I want to buy or sell, and the price I want to pay. That's it.
Yeah.
But in a real estate transaction, when you think about someone's home, there's the deposit. Yeah. There's the subjects, subjects of subject to financing, dates. Subject to the sale. There's closing dates. There's all sorts. It's not just the price.
No,
right.
Well, that's a really good point. When it becomes an auction, it becomes about price.
Yeah.
It's the only thing it becomes about.
Yeah.
And that was one of our big speaking points. It's not. I wouldn't suggest that policy be based on this particular notion, but all of the anecdotal stories that you hear about the family writing a letter and telling the seller, this is our scenario and this house is perfect for our child who has a disability because of the style of the home or whatever it is, and the seller choosing that offer that's $30,000 lower than the highest bid. Those are real stories. Those are not fictitious. And again, it doesn't happen often enough that I think policy should be based on this, but you negate all of those options because it is motivated by price.
Yeah, the irony is you're turning it into a purely financial transaction.
100%.
Which goes against your earlier comment, Trevor. Your advice was make sure that when you're buying a home, know that you're home first and not just an investment.
Exactly.
Yeah, well said.
Yeah.
The other part about the blind bidding that I find kind of interesting is I can see so is the idea that if let's say I'm the seller and Trevor and Brendon, you're the two buyers, and it's just for $1 million, okay, and you come in at $1 million, and you come in at 1.1, does that mean then because it's open, you can then change your offer and go to 1.2? Is that the concept of open, whatever I guess the opposite of blind bidding?
Yeah, well, there's different scenarios, and
Well, so what is the Trudeau government proposing to do?
Well, they're not. So the thing is that the Trudeau government has no jurisdiction over this. So all they're doing is telling provinces who do have the jurisdiction that we want to ban on blind bidding. Go and do what you need to do, and so. No province has kind of taken that full on, nor do I expect anybody to. The data just isn't.
So
there.
this is political theater. I mean, that's not even the right jurisdiction
to an extent. So the recommendations coming from the BC Financial Services Authority on what we're going to talk about next, I think, is the cooling off period.
That's right.
As part of their recommendation package, they did talk to the blind bidding process, and the entirety of their recommendation was don't do anything yet. Do a lot more research before you do anything. But if you do something, make it a really small piece. And so I think the context of their recommendation was something to the effect of, if make it a quote unquote blind bidding process as we see today. But in the event that the seller counter offers to one of the buyers, then that buyer then has the opportunity to see, okay, what am I up against? If you're asking me to counter, what? So it's a very small piece of the overall environment, and even that we're okay with. We're okay with having those conversations and seeing what are the impacts, doing more research. But as we'll talk about in a second, we've not been confident that that's how this is all rolling out. So, yeah.
Okay, well that's how government normally rolls, right? They don't want to ask the guys like you who are in this game every day. It's better off just to sit around at a table.
Well, what's worse is
form
when
up their own policies and then let you know.
What's worse is when they ask and then they ignore it.
Yeah, that's
right.
Good.
And that's what we'll talk about next.
All right. Well, perfect. Well, there's a segue into cooling off. So the BC government introduced legislation in the spring of 2022 to mandate a cooling off period. Now, my opinion is we're already in a cooling off period. I mean, this is like a heck of a cooling off period. The Bank of Canada is doing it for us. But first, similar to the blind bidding, explain what is this cooling off period that they're proposing and how is it going to affect the market?
Yeah. So, and again, I think that's a really important place to start, because even your comments about the market cooling off, it's two very different things. And
bad branding.
It's bad branding, because it does.
It's like the BC government school tax.
It has gotten confused, not just by media and stakeholders at that level, but certainly even within our industry, and then to the consumer as well. So the cooling off period is strictly a consumer protection piece. So it relates to the transaction. It's actually a cooling off period for the buyer. It gives them a chance to cool off, not for the market or for the house or for the price or any economical aspects of the transaction to cool off. It's a chance for the buyer to take a breath. And
it's like a buyer's remorse.
Yeah,
Paid too much.
Built-in buyer's remorse. Yeah, and we're not. The thing is, and I get your position, like from a just looking at it from a business perspective and an enterprise related perspective, less regulation is always better.
Yeah.
But we also appreciate that in markets like real estate, there is an opportunity to make sure that the consumer is protected, and we will participate in all of those conversations, as we did with this. So the minister, as you pointed out, the legislation was enacted earlier this year, albeit completely empty. It was vacant of any actual substance. But the minister announced in November 4th of 2021 that a cooling off period was coming. And
this is Attorney General David Eby, who's also, or is this Selena Robertson?
Selena Robinson,
okay.
Yeah. So Selena Robinson announced the cooling off, Minister of Finance,
yeah,
who is responsible for the real estate sector and the BC Financial Services Authority, the regulator of the real estate industry.
Right.
So that announcement in November gave way to us, the BC Real Estate Association, putting together probably one of the most comprehensive studies that we've done in recent years, perhaps recent decades, around what that means. What are the impacts? What are other jurisdictions doing? Let's pull in all of the data, all of the research. And we came out with a white paper called A Better Way Home, and it was populated with a tremendous amount of information, which then supported 34 recommendations. And those recommendations were actually around consumer protection.
Okay.
Because we are about consumer protection. We want to play in that space as well. Those 34 recommendations were utilized by the BC Financial Services Authority to populate their recommendations to the minister. They were tasked by the minister to come up with, if we've got this approved policy now, what should it look like? What should the contents be? So the BCFSA, the BC Financial Services Authority, came out with 17 recommendations, a lot of which were adopted from our white paper. So we were happy to see that. Us as industry frontline people are starting to have an impact on what this policy can look like. Great. Today, the contents of the policy were announced.
Today? Like today?
Today. And so
really?
when the listeners hear this, it'll be
July?
when the listeners hear this, it'll be past tense. But I've been on. This is actually my 6th interview today, and I've got four more, and the next one is in 10 minutes. So we got to keep going.
Yeah.
Great
timing, man. Good job, by the way.
That policy
like 2 months ago.
So that announcement today was absent of, as I said, 34 recommendations from us, 17 recommendations from BCFSA, and the entirety of the policy was one of those.
Which one?
Just the narrowly focused on the cooling off period itself.
And what did it say?
So 3 days that transactions are required. Real estate transactions are required to have a 3-day cooling off period, and there is a rescission option for the buyer to pay a penalty if they want to enact the cooling off period.
Quarter of a point. So
quarter of
on
$1
million, $2,500.
Yeah.
That's it?
Yeah. So
you can lock up a transaction, and then 3 days later, if you don't want to do this, wow, okay.
So the biggest message out of all of this from us is the regulator is there with the capacity, the expertise, access to us as a frontline organization to do their job, and they've been not given that opportunity at all. And so
was
all
this
of
small,
this research,
narrow cooling off one, was it even one of the 17?
Yes, yeah, that's it's basically satisfying what the original announcement was.
Okay.
So she came out with the announcement that she's going to put in a cooling off period,
so
and
as
that's
a politician,
exactly what she
can
did.
at least say that she's
She
doing that.
did what she said she would. Going back to your original point about the market changing now, the challenge is that the effectiveness of this one policy is going to be absolutely zero, because it really is, and rightly so. Like again, we were actually supportive of. We weren't initially, based on our research, we wanted a pre-offer period. We wanted to give sellers and buyers an equal amount of time that the listing sits on the market and kind of create that opportunity for a breath by everybody. Take a beat. And then the BCFSA recommended the 3-day cooling off in conjunction with it. So we went back and looked at it, and we were okay with it. We're okay with all of this stuff. Like we understand that there is value to making sure that the consumer is protected.
Yeah.
But on its own, in the current market environment, it has zero influence because we don't have multiple offer situations anymore, and we don't have offers without any conditions.
Yeah. I think it acts as an accelerator on the way up and down. Like you were mentioning, you can lock up property. So in a market, when we're back in a market that's heating up, you can lock up 3 or 4 homes. I mean, if it really favors deep-pocketed buyers, because now you're like, well, I want to get one of these, so I'm going to lock up some of them and make sure that I'll just use the rescission on the ones I don't want. Right. Yeah, so on the way up, you're causing extra bids on all these, so you're helping it overheat. On the way down in a down market, then you're going to more likely be pulling your offer, and it has this cascading effect because most sellers are also buyers, and they have, so now you have all of these, sequential sort of sales. Yeah. And I pull my offer, and now all of a sudden I can't get by the house I want, and so on and so on, and it just adds risk on the way up and down. Which we told them.
Yeah, it's a challenge. Like we would have been good with kind of the holistic package. And anyway, the biggest message that we're sharing with government is empower the regulator to do their job and let them do their job.
Fellas, supply is something I think most people agree. We need more supply. Trevor, you were saying that earlier. The bottleneck seems to be, it's being a Vancouverite here locally. We got we got municipal elections happening across the province in October. And it seems like the bottleneck is in approvals, at least here if we take this all back to the Vancouver proper market, like Vancouver, city of Vancouver, what are you guys seeing there? Do you agree? Do you think that there's a real problem with respect to getting projects approved in Vancouver?
Yeah, and it's been a problem for a really long time. It's a problem in basically every municipality in BC. We did some research earlier this year showing if you can get that process down from, like, I think in our model, we said an average of 39 months to get kind of permit to completion down to 2 years, you could lower the long run equilibrium rate of growth in prices by like 1 or 2%, which is a huge impact. So instead of prices growing at 7% every year, which just compounds on affordability, we get that down to like 3 to 5%, somewhere around there, right? And it really helps, but we need more, and we need to get it to market faster. So the inability to match supply and demand quickly is the biggest problem the Vancouver market has.
I see.
We have all these periods where supply is really low, listings are really low, and then you get hit with a demand shock or interest rates suddenly fall, and you have all of this sales activity in a market that's undersupplied, and you get what happened last 2 years where prices go up 40%. So we need that supply quickly, so we need to get approvals faster, and we need to get the construction time shorter.
And we're seeing some of our advocacy efforts work in this area. So last year we went to government and pushed for pushing municipalities more to follow the official community plans, the OCPs, rather than, if something is in the OCP, still going to a public hearing, creating more red tape and more delays. And we've seen the government kind of respond to that. It hasn't helped that UBCM, the Union of BC Municipalities, has come out with their own paper, albeit poorly supported, to say that, it's not our problem, it's somebody else's problem. So our efforts are continuing.
I mean, how can that be possible?
And we'll just continue to play our part to make sure that the supply issue stays on the front.
It's encouraging. Like David Eby has actually been really encouraging on this issue. Like he's really seeing that supply is an issue, and so I think we're going to have
some
leadership,
of that power away from the municipalities.
for both major parties seem to be on the supply side of things. So.
Yeah. Well, guys, this has been a great conversation. I know you got a lot more calls today, Trevor, with this latest announcement. So we've got Trevor Koot, CEO of the BC Real Estate Association, Brendon Ogmundson, who's the chief economist for the same association. Guys, I really appreciate this conversation today. Thank you so much for coming in to Coastal Front.
Appreciated it. Thanks, Andrew.
Thanks, guys.